SBA EIDL Loan Appeal alternative up to $5 million, incredibly fast funding without collateral, no hard credit checks, bad credit is acceptable, and low documentation. I'm also going to be going over that alternative SBA 7A loan with a 90% approval and one of the fastest, easiest, and simplest processes out on the market today, where you can get evaluated for a combination of products, unsecured financing. It can be a term loan, cash advance, and or a line of credit in the meantime while you're getting approved for up to $5 million with the SBA 7A, which is the top tier product. It's very hot right now. And if you haven't been watching any of my content recently, I've been showing you on screen, been speaking about it for months on end of these new products, new combinations, new in-house ways to take care of this so you have the most amount of flexibility and the most amount of comfort and room to maneuver how to use your funds. That's why I always say, don't go directly to the SBA site because it is not in your best advantage. At the end of the day, there probably will be a lot more fees. The terms and the rates are not as attractive as you wanted them to be. How you can exactly use these funds. What is the longer term strategic partnership with this? And so much more in what you can do, and a lot much more stress-free. It's better to do it that way. That's why I'm here to help you as a business loan broker expert. And I've been doing this for a very long time, helping out a lot of industries get the right type of financing for their current needs and what they'll need in the future. We can go into any field: construction, medical, retail, cannabis, healthcare, any kind of industry. I've really helped them get the type of financing that they need to look forward to. So that's what I come out with on this channel. And if you're watching this later on YouTube, you could refer to the description down below where I will leave a free questionnaire form for you to fill out and get in touch. And once you fill it out, I'll be able to then analyze it, evaluate it, and give you a proper response back on your best funding option and options, thoroughly broken down, detail per detail. We're talking about intro, qualifications, how it works, the numbers if you need to have them there, comparisons, all the different options, whether you qualify for them or not, and then a conclusion at the very end showing you what you should do, what's the roadmap, what are some extra bonuses and tips to take on. So that'll be down below in the description. If you're weighing other alternatives outside of this appeal, which I'm about to speak on right now. So what I want to say is I came out with a video just the other day. It was yesterday, where I showed you guys on screen, go to the congress.gov site, and on the right side, you'll see a little search feature. You type in your state, click enter. You can be precise, but your state like Florida, Washington, New York, and then it'll bring you a whole list of representatives, Democrats, the senators, etc. And what you want to do is locate your senator. Usually you get 2 per state. And underneath their image, usually you'll see an address, and then you'll see the contact number. And then you'll also see a link that's hyperlinked in blue. Click that where it says contact, and it should bring you to an email page. And if it doesn't, you'll need to go through the navigation and click on something like dispute issue. And once you click there, then it should bring you to the senator's email contact page. And once you're in there, fill out the details, and there will be a little drop down you click on. It should say small business or small businesses. Sometimes it'll say banking and finance if that isn't given to you. But each state looks a little bit different on how you're doing that. And I gave you guys a template and a few examples on how to use the kind of wording to quote unquote butter them up so they get a better understanding of what you're trying to do. So again, that's another video that I'll try to link you to down below. But what I want to focus on now, what is that EIDL loan appeal alternative? How about if I did send this template in, if I did get a hold of them the way you asked me to, perhaps you spoke with the SBA first and you called your constituent advocate or small business advocate, whoever you spoke to. If it's not your constituent, it's your small business advocate. And you just said, hi, your name, and you explained to them what you're trying to do. And I have this information that is now verified. I just wanted to let you know that I'm sending you an email. Can you please look out for that? And what you do in this email is you send them what you've done. You can send them the problem. You can send them what you fixed. A lot of the times you won't be able to attach it, the very first time around. So if they emailed you back saying, hey, can we get an attachment verification of this amended return or whatever documentation it is, a 2202 example, we can go on and on about those. But I came out with a piece of content on that already. If you want to check it out, if you missed out on it, maybe nobody updated you because they don't have that specific information. And I get a lot of this too from the loan officers. I'll hear things, and a lot of this you just cannot find easily online because I have those personal and business relationships with. And so look down below in the description. And in the meantime, if you're looking to get an alternative, maybe you appealed it, maybe you didn't get even a shot at doing that. Maybe you're still thinking, can I go and apply for the EIDL? That's not open at this time. Quote unquote, funds exhausted until further otherwise, how these appeals are going through and how much time they'll give you a response back and take weeks upon months. And from there on out, then you'll have a better chance because it's been verified. Make sure you have everything verified. Now, what can you do? On my screen here, I have a document that perhaps you've heard of me bring up before in the past. Perhaps you've seen it. But there's this product out there called the Hybrid SBA 7A loan. Now, the EIDL and the 7A are not exactly the same. This is used for COVID relief funding. Growth and expansion should be your primary use. And then on top of that, you can look at consolidating, refinancing, taking care of your debt, payroll, business operational expenses are good and all. But you also want to make sure you have this working capital you can use for expansion. That's why they're called SBA expansion loans, because primarily you're looking to grow and expand or scale your business. So the funds need to be used for bigger purposes. You may have a combination of many. You may be saying, I need it for marketing, I need it for payroll, then I have to open up a new location, I'm going into getting this new warehouse. Okay, that means it's going to be a longer return on your investment. We're looking into years now. So it would make sense, perhaps an SBA Express loan, a standard, the small SBA loans. And so a combination of those, you have equipment you can use it for, and specifically in different industries like trucking, but there are more of them. They may want the equipment to be priced over $400,000 to $500,000. And it doesn't always have to be just one. It can be a combination of them, but just some industries are higher risk. Understand that? Alexander, welcome in. Is this about not paying the EIDL back? I could get into it, but I've spoken about it quite a bit lately, so I'm going to leave that out. I did come out with a video on the repayment and a lot of the things happening with fraudulent activity and an investigation under 10 years about. A lot of people that the IRS has hired to help with EIDL, but I'm going to leave that out for now. And what I want to focus on is this alternative financing product that a lot of people are jumping on top of. And I'll go over the qualifications right now or in a second after I speak about what the description is. And I can go off the top of my head. I have all this. I know exactly what they're looking for. If you're looking for franchise financing, business acquisition of a different type, partner buyouts, if you're looking for some form of a business expansion or growth, what are the use of funds for? Would this be a short return on your investment? Would it be longer term? What are we talking about? A commercial property, you got it underneath that for an SBA loan. Should you do that again because you couldn't get it for your restaurant, your staffing agency, or whatever it is? There are different solutions to this. But I want to quickly go over this document. And again, more information on the Hybrid SBA 7A loan if you want to get in touch. In the bio, fill out the questionnaire, or it should be down below in the description. So the hybrid, it is two separate loans. And I'm going to focus on this first, and then I'll go into if you don't want to consider bridge money. So the hybrid is two separate loans. One is an unsecured financing product. That means a combination of an unsecured term loan or a cash advance or a line of credit. In the meantime, while you're getting approved for the SBA 7A loan, we can look at getting you what is quote unquote bridge money. So if you needed like a line of credit of $100,000 and you get approved for that, or even more or less, and then you later requested an increase if you wanted to, you can use that funding in the meantime while we're approving you. And then once you have that SBA loan, then you can use that to consolidate it. You can even put it all underneath one loan. And what it does, it extends the maturity, it extends the term length already, because the SBA is 5 to 25 years. So an unsecured line of credit, perhaps you got 12 months. Perhaps you got 6, 9, 12 months. Sometimes it's 18 months. A lot of it is a lot harder to. It could be put with collateral 18 to 24 plus months. But let's say you got approved for $100,000 in a line of credit, an SBA loan, you're getting $2 million. well, I want to use bridge money for the time being. I have a project here and I can keep my interest rates low instead of getting a lump sum unsecured at 20 or something percent, where this I'm getting it at 12% or so. But I'm only going to use it for 6 months. I only have 6% now. I got the EIDL loan approved for. This only pays it off at 6% or less time. So it's phenomenal. But before I go any further into those different options, so this can be funded easily and quickly. A lot of the times you see within 1 to 2 days, you can get your unsecured line of credit, term loan, these unsecured financing options without having to put up collateral. And I'll get into how collateral factors into an SBA loan in a second. So the other loan, it is a 10-year SBA term loan for working capital. And this market depends on your industry, but you're seeing a lot of like 7 to 10 year, sometimes 5 to 10. But 10-year working capital, which we can get a letter of intent within a couple of days that I will work on, but it takes 6 to 8 weeks for you to actually receive your funds. So it's no different than what's happening a lot with other types of financing options that can take a little bit longer. You see that with government-related financing. So 1 to 3 months can generally be the time frame for you to receive your funds. So the SBA 7A and the funding for. Now they go up to $5 million, as I just mentioned. And your business, to qualify for this hybrid SBA 7A loan, keep in mind this is a combination, not directly just the SBA 7A. You need to be generating at least $120K a year in gross revenue, in annual gross revenue. A 660 plus FICO credit score is what I'm looking at. In addition, we will need to see 3 most recent business tax returns and 3 most recent years and year-to-date financial statements. The SBA goes primarily off of credit score and profitability of the business. But before I answer anything in the comments, just know that the 120K is the exception to getting the hybrid SBA loan. That's where you get the unsecured financing on top of that, while we're waiting to get you approved for the SBA 7A loan, while we're looking at everything, partner's personal financial statements, and I'll go into some of those things in a moment, the assets and the liabilities, profit and loss, year-to-date. I do a lot of that. That's what I can look at. I collect your information before I forward it over to the lender, so I know what the lender is looking for, and I can see with your details right away what can happen, because I've done this so many times, helped out a lot of people with the SBA 7A on top of a lot of different other solutions. So what you want to realistically be doing for an SBA 7A loan is north of $400,000. Usually $500,000 and above is what you're looking at in annual gross revenue. And primarily to get the best, and we're talking like premium, yes, you want to be doing like $1 million and above, even better. But what we go off is profitability, and you want to have at least 2 years of profitability. That can change over time. It may be 3 years, but generally it's 2 years. It used to just be like, hey, you have a year's worth of profitability at any point. Or now we're looking at 2+ years of profitability. So a 2 minimum is what you look at. So over here, like I said, the SBA goes off of credit score and profitability of the business. What are the benefits? There's some of them here. There could be a lot more depending on exactly the type of financing you're looking for. However, we have to put in liquidity. We have to factor in equity, perhaps some form of collateral, which is the last piece. First piece being cash flow. How can that help service the debt? And you may not have to take any kind of collateral in place. We may just have to have an assets report, and we look at it and see how much you have in this. And if we ever have to use it, that's another question. Now, monthly repayment, fixed interest rates, but could be variable interest rates as the market right now keeps on shifting, and it's specific to your industry. So about every quarter or about every 90 days or so, there can be a revision to see where the market is. How's inflation? How's the economy doing? Specifically your industry and how you're doing. How's your average daily bank balances? What kind of bids do you have? Are you a contractor? Are you in the trucking industry? Do you have restaurants? How long have you been in it? What's been happening as of lately? So there may be periodic check-ins with myself, the lenders, the underwriters, etc. But that's just very common. And if it's a variable interest, sometimes you see above 9%, sometimes 10% and above, but that's common. And as the interest rates right now, you're looking at a prime rate, which is about 5.5. That could change in September, even a little bit before. We're getting close to that. Hopefully it doesn't, but there's a projection there. So 5.5 plus about 2.75%. And so you can get variable, you can get fixed. A lot of things that are happening right now are variable, so it's okay either way. And you're getting some of the best interest rates out there with the best terms. So prime rates, as I just mentioned, what they could be. So you could look at somewhere between like 7, I'd say more 7.5 to about 9.5% or so. Sometimes even higher if it's a little bit more variable. So what would you need? 2 years of profitability, and this in underwriting. Credit is what gets people. SBA 7A loans are based off of profit, at least 10%, low debt, low credit utilization. I'd say way underneath 30%. I'd say keep it underneath 20, 15%. If you have none of it, even better. But don't continue to rack up any kind of inquiries. If you're applying out there, you just had a recent inquiry, you have 3 to 4, you've had 6 already in the past 30 days, in the past 6 months. That can really hurt your chances of what you're trying to apply for and the funding you're wanting to receive. Low credit utilization, minimal inquiries, nothing bad on your credit reports, like late payments being one, child support can really hurt you. No foreclosures, no bankruptcies, no liens. Now I'll get into more of that in a moment here, in just a bit. So plus you have to demonstrate significant use of funds and for growth and expansion and not just recovery, like the EIDL loan. It's very specific for growth and expansion. But on top of that, we want to know what percentage will you be using this for business operational expenses. What do you need to use this for refinancing and consolidation? How much of it is being applied and what's the other rest going to? And so these are things that I keep on top of 110% of the time. So you'll need at least 140, 150, but more realistic is 155 FICO SBSS score. That's business liquid credit. That's a combination of your FICO. That's a combination of that with your business credit, what you have established, what you're building, what's been reporting in your reports. And we can pull that and see what kind of scale you have, perhaps from 0 to 300 or so. And then on a paydex scale, generally speaking, you want to have an 80 and above. If you don't have that, that doesn't necessarily mean it will disqualify you. If you have decent enough of it, but you want to have high enough cash flow to service the debt, you want to make sure that if there was collateral, liquidity, equity in place, how much of it do you have? It's sufficient enough to overlook the business liquid credit score. Usually you get a business liquid credit from the lowest amount up to about 300 or 350,000. Over that, usually it's overridden. But even underneath that, it can be overlooked. Just make sure you have established business credit at the end of the day, because I have people who come to me, they go, I have these restaurants and I have a commercial property I own that I got an SBA loan for. Perhaps it was through commercial real estate, a form of an SBA 7A or /504 at the time against the property. Perhaps there are liens involved. How many positions are we willing to take? And can you get multiple loans underneath an SBA 7A? Yes, you can. We just have to understand the circumstances of your previous admissions and what you have there. And these are all the things that I look at with the underwriters and the lenders. We all kind of get together and we make an assessment of this, and I go over it and I understand better of what had been spit out through underwriting. And if your credit looks clean, make sure you have that, your credit report. Sometimes I'll ask for your credit report to be sent to me so I can revise it and see what maybe we need to look at first, getting a hold of. Perhaps it's a form of credit repair that you need to go through, and I go, hey, this is going to take you this amount of time. So be flexible within the first 37 days, and then there has to be 7 days thereafter for the credit reports to report to those main credit bureaus. So commercial, and a few other things that we have to look at. Now over here, cash flow can overlook it. You can strengthen in your business experience when you have less than a sufficient FICO. What you want to be doing is about 680 and above. With the SBA 7A, that's primarily, but if you have a 700 and above, that's more realistic, because anywhere between 6 to 650 or 6 to 680, that's still looked at as average credit. And that's where you're like fumbling back and forth with debt, making the payments on time, net 30s, net 45s, net 60s, net 90s. How long are you extending your payments out? So you want to keep control of that. And if you have no debt whatsoever, like I have business owners who apply for the SBA 7A loan, that's exceptional. That's great. And they can even lend you more amount of money because you're not taking on extra debt. So they're not sure about even giving you the maximum amount that you could actually get. So when you clean that up, that makes a big difference. Here are the documents that I will need. 2021 business bank statements, and this is correlated to the year. 2022 now, I'm going to need 2021 bank statements from January all the way to December, not just half. So when I communicate this with you very properly, please be mindful. Take the time to go through that list. Don't just submit it as quick as you can. And if there's something else you need to add on and you said, hey, I just sent you the first 6, I'll have the next 6 or so sent out to you by then, that's okay. But don't just rush it, because I will come back, and I know you want to do this as quick as possible. So it's better to have everything ready all at once, send it over, so then I have on my checklist, because I put this all in the Google Drive and in a folder. Sometimes I'll separate it so I can send it to the lender. So you want to make sure it's all there for when I go and do it. So we're not doing this whole back and forth over 3-4 months. I don't want to do that. And if you said, okay, I got to take 3 months to do this because I'm going to be out of town and this, I'm going to be understanding of it. Okay, that's fine. There's nothing wrong with that. And you needed your funds later down the road. Okay, makes sense. But we can evaluate you for another option if that's what you're looking for in the meantime. No, okay, that's okay. We can wait and get the SBA loan like I have plenty of people doing right now, and we can consider that. So 2021 business bank statements depends on the year, 2023, 2022, and how far we look back. 2020 and 2021 profit and loss and balance sheet. What I want to see are these documents, sent separately. I can see things underneath your tax returns, but it gives me a better scope when I look at it in the documents when it's saying to me profit and loss, balance sheet for the year of however many quarters I'm asking for the current year. And then I can go in there and do my numbers. I can do my math and see how the percentage turns out to be year over year. And then I can see your profitability. I can see your net. I can see your gross. I can see business operational expenses, the type of things, how much you were possibly withdrawing out of your account, how much you were actually depositing within your bank statements, and then kind of compare all this and see all the numbers, and then we can move forward. So year-to-date profit and loss and balance sheet, at least through quarter one. Sometimes it may be through quarter one through quarter three. Depends on the time frame. A lot of it can be within a year. That same year, it can possibly just be quarter one. Previous years, 3 years of business tax returns, and 3 years of personal tax returns. Again, I gathered all this documentation. So please be mindful and respectful that if you're going to work with me on this, that you're patient. I don't want somebody who comes in and goes, yeah, I want an SBA loan. Good. This is the documentation I'm going to need from you now that I know you can qualify for this. All right. And then you send it over to me and it's half ASS without any other words. Just here it is. Blah. Okay, I'm missing this. And then it takes 10 more emails, which I don't mind. It's just be mindful. And I'm sure you have your energy and your time that you want to save like myself. And I'm very punctual. But just let me know if it's going to drag out. Like I had a business owner I called today. He wasn't on my schedule today to even give a phone call to because he hasn't been responsive for the last month. He really went cold for about a month. Getting him approved for about $2 or so million with an SBA 7A loan. I just said, hey, let me give him a call today. He picked up, I think, in about the second ring, and I go, oh, hi, and then I said his name. Did you happen to see the email that I just sent you? Oh, no, to be honest, I've been out of town. And I go, that explains why you never got a hold of me or never got a hold of our lender or underwriters, because you were out of town. And it would have been nice for us to know that you were going to go AWOL for about a month. So please don't give me the unexpected where I'm like, I spent time with you. I know you personally. That's cool. I also know you on a business level, but you just disappeared into the thick of underwriting. On the other side, you've been approved. We just need to discuss how much you're looking actually for. What can we actually get you? And then move on to the next step. And that perhaps is, yes, you're going to get your funds. But if you go out of the picture, like my lenders were responding back to me, they're appreciative that I took the time to give him a phone call, but I've been emailing them. I left them a voicemail every now and then, not every single day. But it was concerning to me because I have never received any feedback. And so if I'm never going to receive feedback from you, do not even start with me. You might as well go somewhere else. Deal with somebody who is not an expert, somebody who is not going to show you a strategic partnership or the right roadmap, because it doesn't just end at the SBA loan. There's a lot more flexibility, especially how I do this in-house and how I can connect you with perhaps different banking solutions and how the SBA guarantees things. But just doing it like straightforward and going, hey, I'm going to go this direction, it doesn't always work in your favor, especially when the lenders, they know me, and the kind of benefits that come through because you know me. There's a lot of wiggle room in there, and there's a lot more flexibility that comes in play. So previous 3 years of business and personal tax returns, aging AR/AP reports. I'm going to need a business debt schedule. Sometimes it's an in-house one. You already usually have your own. That can be suffice. Sometimes we may need a little bit of both, depending on what we're asking for in that business debt schedule. But make sure you have that. And if you don't, because you have no business debt or you just haven't put one together, really, get one together. If you have business debt, we're going to need to see that. We just can't see it in other places. We need to see it the way I'm asking for. So one other thing I'm going to need is an application. I can send it to you via HelloSign, and I'll let you know if I'm going to attach it to you, if I don't. And that's what's going to be shown as part of the questionnaire. If you even qualify for it, I'll let you know if it's been attached or not attached. Sometimes you may not see this huge description because you don't qualify for it. So if you meet these requirements and are willing, I put this in bold here, if you're willing to be patient enough to send me your documentation via email for what I'm asking for right above, and you don't mind waiting months to get your funds from the SBA, then we can explore this option. Also remember this, we can evaluate you for the term loan, cash advance, and or the line of credit so we can get you those funds earlier, and in the meantime, we're still evaluating you for the SBA loan. And if approved for the SBA, you can use that to pay off the existing amount and or consolidate it all under one. And so now again, like I said earlier, you still have this extended term, more funding that you receive very likely through the SBA than perhaps what you receive with these unsecured financing options. And then we can take it from there. So that's what I have here. And this is a document that I put together, by the way, and there's a lot of extensive knowledge that I can't cover all in one video that I have from the lenders, but you'll see it when you work with me in time. So this doesn't usually require collateral because it's usually the fourth method that we look at. And the first, usually it's cash flow, liquidity, equity, liquidity, collateral, and there are a few other ways. But the SBA primarily, if they looked at collateral, they want to see accounts receivables. So unpaid invoices, if you've ever worked with an invoice factoring company, that's the major method of them looking at your aging receivables, non-aging receivables, how much can we actually lend you based off of this, and more. So it's pretty cool, the flexibility you get and what types of SBA collateral they look for. But real estate, of course, can be one of them. Equipment, inventory, etc. And then there's individual products and services for like equipment financing. You have real estate. There it is again. Milk. Had cereal in the morning. But there are individual services for each and every one of those. So if you were looking at getting asset-based financing and you had enough inventory, then you could look at that, explore that option. You have unpaid invoices, you have a form of real estate, how much equity. Perhaps we can look at liquidity in form of all the assets you have all together under one. How much cash flow do you have existing in your bank? How much reserves do you have? Can you help service the debt? And we don't want to actually put you in jeopardy where you don't have enough money sitting in the bank, but you have to make the repayments on these loans. And you're like, well, I don't have enough for cash flow. I don't have enough to cover my business operational expenses. You just left me with nothing. That's not what we do. So, but just so you know, and here's an example that I kind of spoke to a client about. So this is a little bit more customized, but I'll skip this part. We'll want to know if you have any assets at least and what possible down payment. Usually a 10 to 20% can be asked for. Liquidity depends on partner buyouts or the different type of business acquisition. That can be a factor, about 10%, depending on the industry, the profitability of it, the risk factor of it. But there are many circumstances where even a 10% down payment wouldn't even be necessary because of the cash flow of your business. And so I've explained the rates for the cash advances and your term loan lines of credit separately below with their individual services without the SBA. But if for an unsecured term loan, usually it's 1 to 2 years. Sometimes you see between 1 to 3 years. A lot over 3 years is quite difficult, but because the banks, we understand they're not lending as frequent and they're being more restrictive on the amount of time they can actually give you. So if they couldn't give you 3 years, but you're like a premium or a platinum client, and we said we could do 1 to 2 years, we can try to push that out as close as possible. But just know that it's unsecured, so the rates usually tend to be medium to high. And for this one, it is 1 to 3% interest per month. So it is, let's say, for example, you got 18 months at 1%, which is phenomenal. 18 by 1, that's 18%. But if we looked at this and said we can get you an SBA loan, you're not even paying 18% of that. Maybe you paid 6%. That's phenomenal. But I just needed a few $100,000 because I needed this marketing campaign to run that's going to spit in $1. Put in $1, it's going to spit out $4. That's exceptional. And you've been doing that for a long time. You're opening up a new office building, a new location. You're refinancing on top of all of this. Oh my goodness. You're rocking and you are literally on fire. I have business owners who do this every day. They love the way I communicate how all this works. Every part of the process, I'm there with you. I know what's happened in the underwriting. I know the probability a lot of the time. Not because I studied statistics or mathematics or chemistry and that before I got into the business world, primarily in like accounting and all some of those other sides, college and so forth outside of that, but because I know how this stuff works. So if you think about it, usually 1 to 2 years unsecured, no collateral, but you're like, well, that's too much. I was looking for more, at least 10% or 10% and below. Well, that's okay. If you don't need that financing, you don't have to have it. We're just saying that you can use it as bridge money if you needed it. If you're not desperate for anything, like I spoke to a business owner just recently, and we spoke in the beginning. I said, I remember you were telling me about what you were trying to do. I completely remember. Don't think I didn't. But yeah, we just wanted to go this direction. So at least you know, and we have that on file. And we go, hey, now I know how much of a line of credit. Now I know how much of an unsecured term loan and or a cash advance I can qualify for. If I didn't want it, at least now I know what's there and what's available. So in the next month or two, something comes up, but I'm not approved for the SBA. I don't have the SBA funds yet. Guess what? So now you have that option available. And you can't say you don't, and then we have to start all over again, and then I have to ask for different pieces of documentation, about 6 or so months of bank statements, or about 3 months, depends on the lender. So it's 1 to 3% interest per month, and a line of credit can be 1 to 3% per month as well. So factor that in on a 6 to 9, 12 month reschedule, usually amortized over a weekly, monthly, sometimes daily, but usually you can get it at a monthly repayment. We just have to see what other positions you have. And if you have a line of credit with your bank, that may affect it to some degree. Depends on how much of the balance or how much you actually were approved for. If you have other types of loans with the bank, I mean, I would always say go to the bank first, but what I recommend is if you can't give up your home, you don't want to put so much, you don't want to take out a lot, you don't want to put up this kind of real estate that they're asking for, you don't want to give up total control, you already have a lot of fees that are racking up over here, they're asking for more, that you want a business credit card, you want this, that's where it isn't as attractive. And they don't give you the flexibility usually on how you can use those funds. They say, hey, you just needed it for inventory. This is what I need you to use it for. If you need to use it for anything else, you either have to come speak to me or this is not going to happen. We don't want to lend you that money so you can use it that way. But over here, they go, yeah, we can open it up. We can do it this way. You can multiply inventory, equipment in different uses. And there's a lot more with building that strategic partnership where you can actually get a lot more funding over time as opposed to just going to the bank all the time and getting, hey, got an initial $500K, but over here we got you out of $300K to $600K, we got you to the $900K, and we did it because you were doing it the correct way. And that's what you want to do, honestly. And the cash advance being usually 6 to 24 months, usually it's 1.19 to about 1.5 or so 19 to 50%. Again, it's medium to higher rates on those. Lines of credits, we can keep them lower, and how we amortize it, how we do the draw fees, how we do the interest calculation on how much you take out and your risk factor. So then I just say, if you can send me all the documentation, I greatly appreciate it. You can reply back to this email with it all if I've sent you it in an email. And then I'll say in this next part, I want you to submit this first. It might be a digital application. It could be a PDF on top of that and then I'm going to need just for you to send me this documentation. And once that's sent to me, I can send it over to the lender. And then we can work together on it. And so I'll have certain links you can get started with. You already know what documentation is needed. I also did a review of the program. You can watch a video on it. Pretty cool. You can see a blog post version of it. There may be a social media post. But I do a lot of extensive work on all of these. And then there are other SBA loan options. I may say this is not the best one for you to look at because of the certain lender, because they're looking at this, you're not wanting to go that way. They're not going to approve you for what you're trying to do. But this lender feels more comfortable going with the restaurants. This one feels more comfortable going with an insurance group. This one feels more comfortable dealing with your trucking company. So I wouldn't recommend going in this direction. And so you'll see that from me. And so there are multiple SBA loan options. And then there's commercial real estate. The SBA 7A lends on commercial real estate. Now, I'm not going to cover that in this video, but what you want to know, I made a separate one that I'll link to down below on the SBA 7A commercial real estate, and then how to get a commercial real estate property mortgage in an alternative way. It's pretty cool stuff that nobody else is sharing with you, and what you can do with the SBA and or in the traditional real estate financing side of this equation. Yes, I do. Let me see. Alexander, you're asking, what's the max to borrow without them filing an ABA, UCC lien? Good. Oh, I love that question. Appreciate you. I don't know if you're still in here, but if you watch this later on, there is no exact quote-unquote max, but what the SBA is more concerned with is how many positions do you have, how many liens. So if you have, not a lot of lenders are going to come in on a second lien. They want to come in on a first lien, so you have to take care of all that first. Perhaps you're in a place where it's federal, and like I have many people right now who haven't withdrawn that, haven't resolved the issue. It's just sitting in that account. LexisNexis usually reports all of this, whether it's been removed or not. So a lot of the lenders will look through those credit bureaus to see what's actually reporting, what's your past history. But just know that it's a very touchy subject, and they want to make sure they usually come on that first position with that lien. They're not having to compete. And then second, they're not going to be able to secure what they need from that collateral. And so it's different for each lender, but primarily that's what it is. And when you're dealing with non-SBA but asset-based financing and it's collateralized, then we can look at first, second, and third lien positions on real estate or equipment or another format. So that may be more of an attractive solution to you if you're currently dealing with liens, but get rid of them. Don't let them hang on. And if you have to do it yourself, there has to be a dispute process. We can work through that. But before you go through any of this, that's what you want to make sure you take care of. Make sure you don't have those foreclosures, no open tax liens, no recent 30-day late payments, bankruptcies, foreclosures in the last 3 or so years is a huge part of it. So public records is the part that everybody gets shut down on. So again, like I just said, no bankruptcies, no foreclosures in the past 3 years, no bankruptcies or foreclosures. No outstanding collections, no open tax liens, no recent 30-plus day late payments. Cash flow, do you have enough to service the debt? It's demonstrated by the type of documentation that I need. SBA-specific criteria will look at no felonies, no delinquencies, and or default on government loans. 2 years in business is what you're looking for, primarily a 680 and above FICO, usually 400 to 500,000, 500,000 and above, generally speaking. Business must reside in the U.S. Business owner, lawful permanent resident. Business again in the U.S. Business must be open to all non-discriminatory basis. Non-profit businesses are ineligible. Your business must be able to demonstrate repayment ability from the earnings. Your business must be not involved, in lending, investing in real estate, religion, politics, gambling, or sex-related industries. It's very heavy on investment properties, like in an apartment complex. That's one. And you want to be very careful that you're thinking about using an SBA loan for that because they won't approve you for it. So any kind of investment property, even if you're like a developer, but let's say they're hiring on the contractor or the construction company to do a home build, a ground construction up property, perhaps. Now, the person who is the home builder, that's different. They're not using it for a fix and flip. They're using it to purchase supplies. They're using it for different things. They may need equipment to help them with that project. So that's a bit different than, let's say, a developer who's then taking this for an investment purpose and then flipping it and then doing it a certain way. So working capital, you can use it for payroll, inventory, marketing, finance, receivables, bookkeeping, and legal fees, hiring, refinancing existing debt, new equipment purchases, no construction, a lot of the times no acquisitions. Depends on the type of SBA lender. So there are SBA 7A acquisition loans. There are for construction. It just depends on the lender you go to. This one specifically will say no. Others will say yes, so I can always help you with those. Commercial real estate, time in business, you must be above 2 years. The business owner's personal credit score must be above 675. The real estate must be majority owner occupied. Example, at least 51% of the square footage of the property you're buying must be occupied and by your business sufficient business and personal cash flow to service all debt payments. That's standard, demonstrated by whatever we need with documentation. No delinquencies and or defaults on government loans. So that's what I'm going to leave it at in this video. If you guys have any questions, I'm going to leave it up for about a minute or two. And if it keeps compiling, I'll stick around for a bit. But you guys have an understanding of what you can do outside of just appealing for the SBA EIDL loan if you have, or if you haven't and you're looking for that alternative. That's what this video was about. The other one will walk you through the appeal process on what you should do step by step. And I showed you guys on screen how to go to congress.gov and what little steps you need to take, what you should do before that, thereafter, how to follow up, time expectancy, and a few other things. So hopefully this video has helped you out to this extent. Look for all information in the bio if you're watching this on TikTok. Down in the description if you are here on the YouTube channel already, where you can fill out that questionnaire form if you haven't already, so I can get a better idea of what you would qualify for and if the SBA 7A loan makes sense for you. And we can proceed from there, as well as all other videos, blog content that I've already released in the past. You guys can refer to that, my email, but the best thing to do is fill out that questionnaire if you haven't. And if you did, please be patient. I have a lot on my plate, and it's me who's working on it. It's like a one-man team right now. And I'm doing my best really to care about you first. I do show a lot of interest and care about you first as the human, how you think, how are you doing up here, how are you doing here, how is your spirituality, how are things going with family, is everything okay? Like, I spoke to a few people today, having to rush to the hospital, them having to go out of town, and then they were telling me about a few things they were doing. Pretty cool stuff, things that I've done or would like to do, and I aspire to be like you. But first and foremost, what I want is punctuality. Is that too much to ask for? It's not aggressive. It's just because I want to make sure that if you're serious about this, you're going to go into it and you're going to say, hey, Michael needs this information. Am I going to drag this out for 2 months? No. Do I want to wait 3 months? Okay, that's different. But am I going to drag it out? That's the question you should be asking yourself. Because I want my day to flow as smooth as possible. I don't want to have to be like, oh, well, I never heard anything back from you. When I asked for feedback, you disappeared for 3 months, 2 years. And then there's this whole thing about how you don't understand, or it's because I was busy, and that's not a place we need to be put in. Let's just face the facts. And how do we get over this? It happened already in the past. How can we move forward and spend our energy on time with the things that matter? How do you get an unsecured loan from Wells Fargo? So like I said to an individual just the other day, sure, you can find all of this information, especially with business credit cards online. But you want to go into Wells Fargo first and foremost. Go through your bank. Go physically in and speak to the individual who can help you. Bank account manager, the financial advisor. Speak with the teller first if you need to. Have a sit-down conversation. That's what I would do to move forward there. But there are alternative solutions like an online term loan through the bank and other ways of getting financing. So I'll leave this open for about another 2 minutes since I did get somebody to question. And while we're waiting, like I said earlier, and I spoke about this, and I'll leave it in the description, you want to have a strategic partnership and a roadmap. I cannot stress this out enough. It's not because I'm looking out for myself. I'm not here because it's the money. For me, it isn't at all. I get it's a business, but for me, it is the value. For me, I want to give you as much as you can without expecting anything in return. And if that turns out to be, hey, we're going to go through this application, which I get is the outcome, and seeing you get funding, nothing makes me more happy and fulfilled than to see you pre-funded, helping you work your way into something and not going into a faulty lender like I had done so many times with people who come to me and they go, is this offer legit? They're trying to give me this, or do you think I should go there? A lot of the time, over 99% of the time, usually it's a no. Even if it's a very reputable direct lender you went through, I can deal with direct lenders, and I also deal with brokerages, so I can partner up with these lenders and the team of people, and I have those exact direct partnerships. Like I spoke to my underwriters today, they said they were thankful because I did not go directly to this lender. They told me, Michael, you can go to that direct lender any day you want. And I said, yes, true, but because it's better to do it this way, especially in today's market, this individual was going to receive an offer of about $35K from a way lower tier lender, but because he did not sign any contracts, yet we were hearing that we couldn't release this and approve him for anything because he was going through this other lender that wasn't exactly being nice about things. So there's going to have to be a talk with them. And so instead of getting him the $35K, guess what we were able to look at? $200,000. Incredible. How do you go from $35K to $200,000? Because you know me. Because you know I know my underwriters. You know how well they know me, personally and in business. You know I know my lenders. So whenever I see a file come to me, I'm going to take care of you, personally and in business, no matter what. It's like me saying the food is on me, but the food is on me for the next week. Now, don't take advantage of that and think that that's what's going to happen forever. But there are a lot of these advantages of doing this, especially when you get into the in-house method, which gives you a lot of flexibility, more wiggle room, more of an understanding of how you're going to apply these funds, so we can give you more time, more working capital for specific percentage use of those funds. It's incredible. And then we go, hey, we can add you on this, more funding, but because this lender couldn't do that, you're missing out on an additional $30,000 to $40,000 in the next 90 days. Doesn't look good. So that's what I'm going to leave it at. Again, one more minute, and that's all, unless somebody comments, and I'll go for a little bit longer. Thirty more seconds. Luis, how are you doing? I think you just filled out my questionnaire. Let me take one look. Oh no. So this was a different Luis. I won't say their last name, but I just had Luis fill out the questionnaire. And if you're in here or you're watching it later, just know that I received it, and then I will take some time. And these questionnaires are amazing because I can send them back to you. Like I had a guy the other day. He literally was on top of things. Like I filled out his questionnaire response on Saturday, sent him a text message Monday letting him know that I had sent that email. That's all I will do. I don't harass you or heckle you. And guess what he responded back to? I'm already on top of it. I'm on it. And I go, I appreciate you for taking action and being on top of it. Because it doesn't take always a phone call. It doesn't always take 3, 4, 5 emails back and forth. There's a place and a time for this, of course. If I need to learn more about your exact expansion project or projects, well, how exactly are we going to get this thing funded? Because you have a percentage of this that can't be applied this way, but then you have a commercial real estate property, and then you have another project that you want to get other kind of financing for. So we're going to have to look at separate SBA 7A loans, and then a commercial real estate loan, and then the list goes on and on. So I'm always very flexible with you guys and very understanding of what you're looking to do. So my problem with this is, Luis, if you're in here watching, I would like to know the numbers with these. It's very difficult for me to know, unless you said unknown, due to the fact that's, I think, what it is. Okay, I saw it in the additional notes. So when you said the exact amount is negotiable, you might be putting the business that you're trying to acquire their funding details. What I recommend is, if you are trying to get business funding and you're purchasing an existing business, that you put your existing business, because that's what we go off of. We can't just get you an SBA loan because you want to purchase an existing business if you can't even service the debt, if you have no correlated experience, or at least something similar. You don't have the credit, you don't have what we need. How are we able to just give you money? So we need to know your existing business. So if, Luis, you're in here watching, and anybody else who's trying to fill out my questionnaire, when you're purchasing an existing business, your place to put it is in the additional notes section. And I might make it more clear, so I do apologize if I didn't say, please, if you're purchasing an existing business, please put your existing business. If you have one. If you don't, it can be quite difficult to fund unless you have sufficient enough collateral. We can look at that. But even then, it'll be a bit difficult. So that's going to be a one where I have to email them back. Is it Joe or Jojo? Welcome in. You just started your LLC? Nice. How did that process go? I know it can be a little tedious, especially right now because I'm helping out a lot of people with that, especially my cousins. The amount of things they've had to go through. One of them opening up a cleaning company. How can you get startup grants for funding? Good question. So without going into the topic specifically, I have grant opportunities in the bio. I don't know if you've referred to that document, but it gives you a whole list of different minority, women entrepreneur, Hispanic-owned businesses. But it's not like one specific grant is for trucking. One specific grant is for this company. Some of them, they may tailor more to it, may have that, not a lot. Because of the SSBCI program right now that's being pushed, that's being catered to a lot of different businesses. And that's its primary focus. And you need help with purchasing the food truck trailer? Understood. How much would that take? Hey, we've all been there. I mean, what is it that's confusing you the most? But in the bio, I have the grant opportunities, and you can fill out the questionnaire too. And then in the questionnaire, I'll send you the grant opportunities, while at the same time you get an idea of what else you can qualify for. Even if you don't qualify for it, this is what I love doing. Like, I'll show you the right lenders, I'll show you the right brokerage. Sometimes I'll show you a direct lender, sometimes I'll show you a brokerage that's better, where I have those relationships with those lenders directly as well. So it makes more sense to do it in an in-house format, because like I said, this other guy, if he would have taken that offer, it wouldn't have been enough. But because we were giving him $200K, a big difference from 200 to 335K used, got it. Okay, that's good to know. Bring the price down. Today's market used is a lot more out there than an actual new piece of equipment, because there's a high demand, less of a supply chain issues is another factor that we have to look at. But yeah, those are the circumstances, and I can take another look if you go through the questionnaire form. Oh, I've been so busy today. My 10 to 11 was moved to 11 to 12, my 12 to 1. I was supposed to create about 2 to 3 videos today. This is the only one I could get out for you guys. I still have a lot of people who are emailing me, people who have been texting me who I haven't responded back to in 2 to 3 days. I'll try to respond back to them a little bit later, but later is now. I'm very organized with my time, but as you can see, sometimes it might be a chat with a client over an email, or it might be that I have to get word back from my lender, so I have to pay close attention to it, or it's a phone call that took an extra 15 minutes, and then after that 15 minutes and something else came up that's very urgent that I didn't think would come up right away, and so 15 to 30, 45 minutes pass, I didn't even work on this project that needed to get done. And if I look at my calendar right now, I did finish everything that I needed from about that time. That took me about 30 minutes to finish. Then I transitioned to this topic. And then I did my number 9 activity that needed to get done right here, which I did do my follow-ups. I did follow up with you. And then these, I put them a little bit lower because they don't need an immediate response back to. Although I do. You have texted me 3 days ago. You have as well. You didn't need funds. You just wanted to see what you could apply for. This individual wouldn't qualify for until they have cleared up their amount of negatives they have in their account, non-sufficient fund days. You just completely went AWOL. I don't even know what the heck you're doing. You over here did the same thing to me, gave me no feedback. That's disrespectful in my eyes, because when I speak to people, I usually will ask you what your outcome of all this is, not with funding, but with me. And I like to build a great personal connection and business relationship with you, because this goes far beyond getting just funding once. I have people who come back to me all the time. They prefer coming to me because they know what partnerships I have. They know the amount of flexibility that you can get. And without that, it's like you're causing yourself a lot of more problems. You're then seeking out another advance. If I didn't tell the person today not to stack, I have told a couple of people today, they would have never have realized that. They would have taken an offer. They would have gone over here maybe to add us on top of it. Nope, you're done. We're not going to look at you ever again. This lender doesn't want to do that. You just lost your A-tier lender, your B-tier lender, your C-tier lender. The ones buried beneath will probably take a chance on it. But the ones that are the very bottom of the lenders, you have to be careful of, because they can be very mischievous. They can be very hard to work with because they're looking out for themselves, and they may be contacting you. Like I had a business owner today. I was fired up you are welcome. When I found out that my guy, who I know personally and in business, like I connect with him on Facebook, I know him, I know what he's doing, how well he's succeeding, what he's contributing to the community. It's amazing stuff. And so we kind of communicate back and forth, and we talk from time to time. He was coming back to me, hey, do you know anything about this? I've reached out to him first. And he goes, no, I didn't never sign any contracts. Well, we're being told otherwise, that you had, and that we cannot come in and help you. And he goes, no, look, I'll send you the images. He sends them to me right away when I'm here. I look at them. That's all I needed. You don't even need me to look inside of the contract to see if there was even a signature there and what those details entailed. That could have been the next step. If I would have had authorization to do it, I could do it. And so when I saw those images, we were on the safe side. Booked. We had to check in. I had to have a word. The underwriters, let's just say they're going to get their act together. And I don't take no BS. And so I'm a very nice guy, introvert. But when it comes to things like this, I have your back, 110%. Don't think things get past me, because they really don't. When I see fraudulent activity, I see manipulated bank statements, I see defaults from a mile away, even before they've even happened, because I know how many payments you're taking in per month, how much are you depositing, who are you actually contracted with, how many, and a lot more things. So I take that all into consideration. Jalisco Albert, welcome in. You have a trucking company, it's an LLC, nice. and I need equipment, how long have you been in business and what kind of equipment are you looking for? I was supposed to end this, guys, like 10 minutes ago, 20 minutes ago. But like I said, if people are commenting, I have a little bit more time. Nice. So you're well above that like honeymoon stage and what we would consider startup. A lot of companies are considered even startups at 3+ years, 3 to 5 still. So once you get over the 5-year frame, how many trucks do you have on ground? And what's on your fleet? Do you have enough operators? Do you have enough people to service however many trucks you have? Are you just limited? A trailer? Got it. But how many trucks do you have operational? I'm just thinking of different scenarios. Yeah, so I'm thinking of different things. I'm considering the circumstances of you getting a new trailer, you still wanting to get another truck, you only have one truck. And that kind of, to me, gives me red flags because even if you've been in operation for 7 years or however much time, what it says is, hey, look, I have one truck. If this thing breaks down on me, how new is it? How old is it? That's another question. Have you had to put any kind of repairs in it? And what if you are not operating it? What if somebody else isn't servicing it? Do you have another person to back you up on it? You're doing entertainment tours, and I need a fleet of 3 trucks and a trailer. 2020. Got you. Thank you for being specific. That really does help me. Now I know what you're going to need this for. Yeah, and I have a better understanding of what that is. So I'm just painting the clear picture in my mind because I know how the lenders think and I know what will happen in underwriting. One truck, high risk. 7 years, high risk still. Trucking, super high risk. But it's just a matter of looking at cash flow, because if it's based off of revenue, that's one thing. It could be based off credit or collateral. You can give up equipment, but you may not have it, so that's out of the picture. So traditional equipment financing / leasing to own will be the option to look at. 300K plus a year for each. Nice. Well done. Yeah, that speaks to higher volumes. But when I look at an actual file, I want to see if there's going to be enough cash flow to service the debt if we're just looking at revenue. And then we can perhaps look at an equipment financing / leasing route if the revenue is not enough to suffice giving you enough for the trailer, which generally it isn't. And you shouldn't be getting revenue-based financing like unsecured term loans and merchant cash advances for these types of solutions. They're used for equipment, so you should go through an actual equipment lender. And I have those partnerships with the best. I actually do them a lot. I have my A, B, C plus tier lenders. And I go, this one, boom, that's the one. You have the right details. Just understand that if you're looking at it, a lot of the down payment has increased. So you'd expect there to be like 10 to 15% if you're not a startup. Startups usually get between like 15 to 20%, if not more. But in today's market, 10 to 15 usually is hard. Like you're looking at closer to 20% and above. And sometimes you may not even have to put anything down. Just so we look at the actual state of your business and we go, well, no, we're actually going to need you to put a down payment of this. And this is all the stuff that I can communicate with you in time when I get not only the pre-qualification, but the actual offer in place, because I broker the deals and I actually act as the agent too. So I have a lot of those relationships with. And there's a lot more. Don't think that I just gave you everything, because I could be spending, my God, on equipment, because I specialized in trucking for a very, very long time. So I know my stuff to a T. I know exactly what these lenders are going to do. And if it's scrutinizing, and if you feel like, oh, well, you're asking for a $30,000 down payment on a $150,000 truck. This, I might as well go to the dealership. But this is why. Like I had an individual the other day, your credit was just terrible. It was in the 500s. Be considerate that we even evaluated you for that. And we asked you to put down $60,000 on 158,000 or so. Well, I can't do that. Can we do at least 10% of this? Can we do at least 15 to 20,000? I can look again with my lender, but I know the answer because I've done this 100 times. But that's the difference, guys. This is the difference when you come to me. You guys get the flexibility. If you spoke to the lender, hi lender, can I instead do a 10? They're going to shut you up. They're going to say, shut up. You either give me the money or you don't get any kind of funding. They won't say it, but that's what's happening. I had that at the very beginning as a broker, especially with me getting funding was one. I did that in the beginning when I was trying to help my business grow and expand. But when I became a broker, when I was learning my lessons in the beginning, they would come back to me and go, Michael, they didn't say it to me, but shut up. Either we have this information or we don't. And it didn't just happen once. It's just part of the learning process, and then everybody goes through that. But once I understood it, I'm like, okay, this is easy. This is a breeze. This is exactly what we're looking for at each and every step of the process. When you want a piece of equipment, you want a trailer on top of a truck. What kind of truck? Reefer, 18-wheeler. What are we doing? And then we move forward from there. But without knowing too much of your file, I can't say much more. I'm just looking at a previous conversation I had with this client. That was nuts. Some other person trying to broker a deal that I was already taking care of. And it has to be justified. Like, that's how much I care. It's like, it's one thing you went in when you weren't supposed to. There's a privacy for the client. Instead, you didn't abide by it, and it fired me up and a few other people that were like, we're gonna go speak with their account manager. We know them. Vas a ver. And that's not good practice. I never do anything like that. I never, like, somebody's already working with you, I'll understand your situation and I'll go, it's better for you to stay there. You've already worked with them in the past, or no. And quite honestly, not because I don't want to take anything away from anybody, but because they misled you in the wrong direction. It'll be more having to go back to them. They're not giving you the full picture. You're asking questions they can't even answer for you that I have. But you instead said, I'm going to go over here. And then come to find out that you could have got out of that in like 3 months, but instead you've been in it for 2 years. You just defaulted in your 1 year. What's going on? Well, I just tried speaking with this guy, and for reasons I couldn't really understand what he was trying to give me, but I took it anyways. Oh God. And so it's not like I do that. It's just, be careful. You got approved for a $73K new trailer. Nice. Not used there. With $20K down. Relatively good, but again, I can't speak to, I have an idea of why you got that offer. I can kind of reverse engineer from the revenue, which would make sense why you're getting that. But I have to look at more like average daily bank balances, like quite a bit more. So I can't, like I said, I can't until I have that. And I'm not going to ask you all those questions. That's more confidential. So in the bio, my questionnaire, you can fill it out. Get a personalized and customized email response on your best funding option and options, thoroughly broken down like no one else will ever break it down for you. Guaranteed. I'm not just saying that. I know my stuff. Not in a cocky way. I've never been that way. Just confidence. I know what I'm doing. You are welcome, Albert. Look forward to working with you, getting to know you a little bit more. If you don't have to open up too much to me. I'm an introvert too. It's hard for me to trust somebody. But a little thing here or there doesn't hurt. And then, this is how I'm going to take care of you in business. And I do a lot of this every day, guys. Like, this is my world. This is my oyster. Come to my world. It's like me putting my arm over your shoulder. I'm not even talking about business yet or anything. I'm just very casual about it. I'm very stress-free. I'm not a salesperson. I'm an academic. That's what my background is. I went to school, studied chemistry, studied the sciences. I loved it. And then I got into more of the business side of the equation when I realized things. And then after, I ventured into different industries. I worked for different companies underneath warehousing, construction, manufacturing with my dad at one point, construction with my uncles. That was a very high risk industry, so I had to move out of that. Got into manufacturing, was a machine operator for a little bit of time. And then I got into becoming a headerman for a little bit, working for an aerospace company. Realized those jobs were not for me. And this is all while I went to school, guys. So people will say the words wise. I guess you can say that. But yeah, at 29 years of age, and I know I'm not old, but I act like an old person. And that's just my nature. I'm like an old man in a 29-year-old body, to be honest. A lot of people, my younger brother will tell you that. Like, Michael, can you put your shoulders up? Can you look at your back? And I do yoga and I stretch and I do these things. My knees are good and everything. I didn't grow up with the best genetics, but I was a Division I soccer athlete. So I know hard work. I usually can outwork anybody. Working this way, cerebrally. But I know what I have. I don't extend myself into something that I don't know. So, without going too far into my story, that's just what happened after school, and was amazing, was hard, thinking going in this direction. That's what I always recommend is, explore different areas. Even if you're underneath one company and you're moving around, like you're the person doing this operation, and then you're the one handling the product, or you move from manufacturing now into the construction space, you understand different industries and how they work, how they function. And I have a very good idea now of all of it. And I worked in inventory, supply chain, logistics, did that, handled budgets, physically worked hard moving media for the time. I had to make my keep in that company. And then I worked a lot hard on this part on the computer. But it just goes to show, if you stick things through, there's always something good on the other side. Don't be feeling stuck in your current position. And always know that there is a way to move forward. Get out of it and go forward with it. So 30 more seconds. Oh, hold the me to talk, bio, link, questionnaire, fill out. You can even schedule a consult. And then usually it's direct messenger. If it's a phone call, has to make sense. I don't just jump on every phone call with anybody and everybody. Sometimes it speaks to volumes that it makes sense for me to do it. And other times it's like, it's more emotional, and I get that. I love hearing the emotional aspect. But this is where we're at now. How does this sound logically? Doesn't make sense. So if I were on a phone call every single second of the day, right? And I'm not much of a, pick up a phone and call. But this is what sometimes it's required to do, and it makes sense to do it. But a lot of this can be done via email. $15 more seconds. A lot of you guys I still have to respond back to. Look at this. Flooded. And this is not even the second page yet. So I'm going to take time in this evening. Yesterday, because it was Monday, I didn't want to work at night. Wanted to relax my mind. And so tonight, maybe a little bit later, 8 to 9 plus, I'll work on responding to some of these emails. And then get my schedule ready for tomorrow. on everything that needs to get done in the day, business operational. I need to look at the financing side. I need to look at the product marketing, and I need to look at my margins on this. So these are a lot of things that I'm going to be checking on tonight, so it's ready to go for tomorrow. Okay, that'll conclude everything in this video. I appreciate you guys for showing up, commenting, being brave enough, courageous enough to do that. I know what it takes. It can be difficult at times, especially with an introverted personality. And, you know, extroverted, but with ambiverted, the two together. And please refer to the bio for all information. Look in the description if you're watching this later on YouTube. Like always, I don't take you guys for granted. You guys are the reason why I wake up every morning and I do this, because I can deliver like no other. Where other people don't give you enough clarity, they don't give you enough information, they overpromise and underdeliver, or in other ways, where I will then come in and say, be careful, don't do that. It's okay, you didn't know, but now that you do, this is the way you need to work this. And then we can move forward from there. That's all for now. Take care. Bye.